Today, the US dollar lost ground against major currencies including the euro and the pound sterling. Investors almost ignored the UK claimant count change data that was published earlier today. However, the report is really negative. The fact is that the unemployment rate is advancing and has already hit the level of 4.1%. At the same time, the number of unemployed claims jumped by 73,700. In other words, the UK labour market situation is getting worse. However, the pound sterling is showing attempts to rise instead of the expected fall. There are two reasons for that. First of all, it's the weakening US dollar, and secondly, expectations of the results of the second reading quota on the UK internal market bill. Yesterday, the situation was the same. The pound sterling was gaining in value as investors were full of hopes that the House of Commons would reject a bill proposed by Boris Johnson that violates a huge number of the already signed agreements. Notably, some of these agreements were signed this year. However, the UK Parliament approved the main idea of this bill. Today, markets are focused on the second reading, during which parliamentarians will make their own edits and changes. Thus, investors expect that the changes will settle the trickiest issues of the UK internal market bill that have already affected their relations with Brussels. Moreover, these disagreements led to stagnation in the negotiations and the EU's threat of a legal auction. Thus, the House of Commons will shape the market dynamic today. That's why the pound sterling is likely to lose in value after a jump. Moreover, the currency may show a more significant decline. As a result, traders will hardly pay attention to the US industrial production report that is expected to unveil a smaller drop. However, this data is of minor importance and seldom influences the market sentiment. The euro-dollar pair passed the middle level of 1.1810 and reached the upper limit of the range located near 1.1910. After that, it showed down and dropped. On the chart, we can see a pullback from the area of 1.19 and 1910 that was approached during the Asian session. It's quite possible that the pair will continue hovering within the levels of 1.17, 1810 and 1910. That's why the number of short deals may rise, pushing the price towards 1.1860, 1810 and 1700. According to the alternative scenario, the price may consolidate above the local high of 1.1917 locked on September 10th. This, in turn, will lead to a larger number of long positions with a targeted level of 1.20. The pound-dollar pair slumped to the important level of 1.2770. After that, the pair slowed down and rebounded. Such a sharp change resulted in an overheating short positions that caused the oversold conditions. According to the trading chart, the pair is hovering along the level of 1.2885 within the range of 1.2814 and 2917. If the pressure from the news flow becomes weaker, the pair may start moving towards 1.30. Otherwise, it will continue fluctuating within the mentioned range that could become wider to the level of 1.2770. That's all for now. We continue to learn developments on financial markets. Subscribe to our channel and keep abreast on latest events with us. See you in a couple of hours on our channel with a new video.